Good morning, good afternoon, good evening, depending on where you are in this world. This is Hejin Lee with a morning update for Bitcoin. Okay, prices seem to be doing a bit of a decline. And as I have been consistently saying now, it'll be ideal to get a lower low to finish this correction once and for all. However, if it wants to drag it out for a longer time frame, then that is what will happen. And at around this area, at around 8,000 or so, if we can get this, A, B, C, D, E. By the way, the more correct way of labeling this wedge it should be 1, 2, 3, 4, 5. The reason for that is because I have 5. 1, 2, 3, 4, 5. ABC 2. 1, 2, 3, 4, 5. 3. ABC 4. And we should see 1, 2, 3, 4, 5. So this is more correct. This is the correct way actually. And this is the only type that, to me, this is a leading diagonal. And the diagonals from the leading side would have 5, 3, 5, 3, 5. And that would have the same labels as an impulse. From a subwave perspective, 5, 3, 5, 3, 5. So wave 1 has 5 subwaves. Wave 2 has 3 subwaves, just like here. You know what? So here wave 1 has 5 subwaves, just like here. Wave 2 will have 3 subwaves, A, B, C, A, B, C. Wave 3 will have 1, 2, 3, 4, 5 subwaves. 4 will have 3, A, B, C. And wave 5 will end with 5 subwaves. And these 5 subwaves here will overlap. Notice how these do not overlap. The rule of 4 not overlapping with 1 is broken here. Look at 4. Way overlapping with 1. That is the exception in a diagonal, leading diagonal, where the 4 easily overlaps with the 1, and that allows that degree of overlap to be excused because it has this 5, 3, 5, 3, 5. From a subway perspective, same numbers as an impulse, subways waves, but it has an overlap. Now, I want to also show that this probably will be an overlap also. The final one wave, final fifth wave. So if this is the final, I believe there will be a lot of overlaps. 1, 2, 3, 4, 5. What makes me feel good about this is if this diagonal count, because it counts so well in the subwaves, 5, 3, 5, 3, 5. Then these 1, 2, 3, 4, 5 final overlapping subwaves of blue 5 provides a good confirmatory evidence of this pattern playing out to fruition. I've already shown how this zone works meets up very well with the 0.618 of the Fibonacci. So now if we go to the daily zone, I did it the wrong way, sorry. I always get confused whether I should go bottom up or top down. It is. So this here is the 0.618, the golden ratio zone right here. We zoom back in on this Fibonacci. It's hitting right where that apex is just about, where the two lines of the triangle is crossing, intersecting, very close in proximity. So my buy zone would be in this range. In the range of the white box. This is where I will be starting my first casting of ladder. Now there is another landing zone right here at 0.781. This line represents a 78% retracement. There is a scenario for that. But as long as this pattern of the wedge is playing out so far, and this top line has been hit once, twice, 3 times, almost hit it right here also for the fourth time, and has held. That means it's trapping the price within its contracting lines of the triangle. The other indication of this triangle, usually volume declines. Okay. We are seeing a steady decline of volume. It would be confirming not only at this degree, but at this higher peak degrees, the steady decline of the volume to mean that as price is getting more trapped within these narrowing contracting lines, it has less mobility of the price to go up and down. That means volume declines with it. And as it gets closer to the apex, the point where it intersects, it can't take it anymore until it explodes. And you see an explosion of volume as well. That is the scenario that I would like to see, that I'm projecting, which is my current primary count. I will also be doing a video later today on degree of trends. I think many are new to Elliott waves, clearly. and they are confusing higher degree of trend, which does take much longer time, with lower degrees of trend, which is more from a shorter time perspective. And I'll be discussing that in a later video in a more of a didactic format. Because some of the longer term degree of trend projections that I've been giving is, I believe, unfortunately being confused with shorter degree of trend horizons. And if you look and review my tutorials, which I have adamantly and consistently recommended, to at least gain the basics of Elliott waves and not just take it as a spoon-fed system from my blog, where you say, oh, Hedgen said $22 for EOS. We're not there yet. He's wrong. That is an uninformed state, in my opinion. You clearly have not taken the time to review my tutorials, which are free and contains the needed background that you need to understand the projection of higher degree of trend targets versus the shorter degree of trend targets. It's a level of confusion. People are having constant and consistent degree of trend confusion for a higher degree of trend, for a shorter degree of trend on a target perspective that I give, and thinking that's going to happen in 2 days. That is uninformed. That is not what I mean in any way whatsoever. My target for EOS is still in the 20s, but on a higher degree of trend, which is more on the terms of months probably to weeks. I don't usually project time, but the degree of trends that are higher are usually in the multi-weeks to multi-months time frame, not today, tomorrow, and in between there will be corrections, and we're having one right now. So, but still, to address the very high level of level confusion from a degree of trend level perspective, I will do set up another tutorial video and post it. And hopefully that will help clear up a lot of confusions. Again, if you haven't done so, please consider going to the end of my blogs and reviewing the basics of Elliott waves and chart patterns, at least the tutorials 1, 2, and 3. These tutorials 1, 2, and 3, laddering, when to buy, when to sell setups. For people who are all pissed and upset for whatever reason, thinking that $22 didn't show for this and that and what have you, if you understood the degree of trend, I think your perspective will be a little better as to how Elliott waves work. Have I gotten some calls wrong? Hell yeah. What do you expect? Perfection? How many times have I said this is not based on the principle of certainty, but on probability? So yes, did I get calls wrong? Absolutely. Welcome to trading. Welcome to investing. You're going to be making a lot of mistakes. Me too. And if you happen to be on a trade call that I made which didn't go so far well, consider it as a learning lesson. Learn from it. From every mistake I make, I learn. A good trader, the only way to become a good trader investor is to become a bad trader and an investor. First, forgive yourself for your mistakes, learn your lessons, and try again. And that's what I've been doing since 1997. So here, if you haven't reviewed laddering, and I consistently say ladder in, ladder out, etc., and you just buy everything in a single swoop, well, that's your mistake. And the price goes below your buy price, and you don't have a ladder at a lower price to buy at, you have no cash, you got no one to blame but yourself. But human nature has it so that when you make your mistake and you feel guilty and bad about it, human nature wants you to project that guilt to anyone else but yourself to be responsible. Because that'll give you temporary relief. It'll give you a temporary feel good so that you're no longer the responsible one. It's not because I made this buying decision. Every buy and sell is a self decision. You need to understand that. And if you don't accept that, you don't belong in trading and investing. And if the first reaction you have is to blame hedging or blame anybody or blame the dog that's in your way because you made a bad trade, you need to then develop better emotional maturity. This is a very vital one. Tutorial on the use of Fibonacci. I get so many questions on this. How do you use Fibonacci? How do you know where to put the waves, etc., etc.? It's all in this. At least if you can give yourself a view of each video maybe 3 times with paper and pencil, taking notes. And you might be thinking, I don't have the time for that. Well, then you don't have the time for trading and investing in cryptos. If all you want to be spoon-fed, that's not what my blog, that's not my function. And if you don't even have these books, or better yet, many of you may have a book. These books, maybe you bought it, but did you read it? Did you study it? Or have they become a doorstop? Now, I put this to the genuine followers who I hope, help with my analysis and my tutorial videos and my technique augment their due diligence. For the rest of the pure haters, I'm not talking to you. None of what I said is bearing to what you're saying or what you're commenting on my comments. Now I have put just about every hater on mute. And as a result, I don't have to see their comments anymore. And I will be taking a lot more active role in the comments once again. And I'm sure you've seen that over the past couple of days, and that'll continue. So I will make a commitment to that. I stay away from the hate comments, whatever you mean. Well, I've been muting every one of them possible. Still doing it every now and then, daily. But what I just said earlier, you gotta really at least try to give yourself this basics. And then your comments will be a lot more related to what we're trying to do. Okay, I get off my soapbox. Thank you very much for your views. And I look forward to hearing your comments. Thank you.